The Federal Reserve, often simply referred to as the Fed, plays a pivotal role in shaping the U.S. economy. While its decisions might seem abstract or distant, they have direct implications for everyday Americans. From influencing the interest rates on your savings account to determining the cost of borrowing for a home or car, the Fed's actions ripple through the financial system. In 2025, amidst economic uncertainties and evolving fiscal policies, the Fed's strategies are more consequential than ever. This video delves into the top 10 current actions by the Fed that impact your financial well-being. 1. Maintaining interest rates amid economic uncertainty. As of March 2025, the Federal Reserve has chosen to keep the federal funds rate steady at 4.5%, following a series of rate reductions in late 2024. This decision reflects the Fed's cautious approach in the face of economic uncertainties, including the effects of recent tariff implementations and fluctuating consumer spending patterns. By holding rates steady, the Fed aims to balance the dual mandate of promoting maximum employment and stabilizing prices, ensuring that borrowing costs remain manageable for consumers and businesses alike. 2. Slowing the pace of balance sheet reduction. In a strategic shift, the Fed announced a significant slowdown in its balance sheet reduction process starting April 2025. The monthly cap on Treasury securities runoff has been reduced from $25 billion to just $5 billion. This move is designed to maintain adequate liquidity in the financial system, especially amid ongoing debates over the government's borrowing limits. By adjusting the pace of quantitative tightening, the Fed seeks to prevent potential disruptions in financial markets and ensure the smooth functioning of credit channels. 3. Monitoring inflation trends closely. Inflation remains a focal point for the Fed. While there has been a slight moderation in inflation rates, they still hover above the Fed's 2% target. The central bank continues to monitor price trends meticulously, assessing the impact of various factors, including supply chain disruptions and policy changes. By keeping a close eye on inflation, the Fed aims to make informed decisions that prevent the erosion of purchasing power and maintain economic stability. 4. Navigating political pressures to maintain independence. The Fed's independence is crucial for objective monetary policymaking. Recently, there have been heightened political pressures, with calls for changes in leadership and policy direction. Fed officials, including Chair Jerome Powell, have emphasized the importance of maintaining the central bank's autonomy to make decisions based on economic data rather than political considerations. Upholding this independence ensures that policies remain focused on long-term economic health rather than short-term political gains. 5. Addressing the impacts of tariff policies. The introduction of new tariffs has introduced complexities into the economic landscape. The Fed is actively assessing how these trade policies affect inflation, consumer prices, and overall economic growth. By analyzing the ripple effects of tariffs, the Fed can adjust its monetary policies to mitigate potential negative impacts, ensuring that the broader economy remains resilient in the face of trade-related challenges. 6. Supporting employment and labor market stability. One of the Fed's primary mandates is to promote maximum employment. In 2025, the labor market has shown signs of stability, with unemployment rates remaining low. The Fed continues to monitor employment trends, ensuring that its policies support job creation and workforce participation. By fostering a robust labor market, the Fed contributes to economic growth and the financial well-being of American households. 7. Enhancing transparency and communication. Transparency is key to effective monetary policy. The Fed has made concerted efforts to communicate its decisions and the rationale behind them clearly to the public. Through regular press releases, reports, and public statements, the central bank provides insights into its policy considerations, fostering trust and enabling consumers and businesses to make informed financial decisions. 8. Adjusting strategies in response to market feedback. Financial markets are dynamic, and the Fed remains responsive to their signals. By analyzing market trends, investor behaviors, and economic indicators, the Fed adjusts its strategies to align with current conditions. This adaptive approach ensures that monetary policies remain effective in achieving desired economic outcomes, such as price stability and sustainable growth. 9. Collaborating with international economic partners. In an interconnected global economy, The Fed collaborates with other central banks and international institutions to address shared economic challenges. By engaging in dialogue and coordination, the Fed contributes to global financial stability, which, in turn, supports the U.S. economy. These collaborations help manage cross-border financial flows and mitigate risks that could impact domestic markets. 10. Investing in research and economic analysis. To inform its policy decisions, the Fed invests in extensive economic research and analysis. By studying various economic models, trends, and data, the central bank enhances its understanding of complex economic dynamics. This commitment to research ensures that the Fed's policies are grounded in robust evidence, increasing their effectiveness in achieving macroeconomic objectives. The Federal Reserve's actions in 2025 are multifaceted, addressing a range of economic challenges and uncertainties. From managing interest rates and inflation to ensuring financial system stability and maintaining independence, the Fed's decisions have profound implications for the daily lives of Americans. By understanding these actions, individuals can better navigate the economic landscape, make informed financial choices, and anticipate potential changes in the broader economy. Staying informed about the Fed's policies empowers consumers and businesses alike to adapt and thrive in a dynamic economic environment.